Good afternoon, everyone. It is 2 p.m. on Saturday, August 13th, 2022. I hope everybody's been doing well, and I know I've been away, not making a lot of videos. Honestly, with the summer, I don't trade all that much. I mean, I still look at the market every day, but I tend to trade lighter during the summer, and I've been away from the screens quite a bit, so that's part of the reason for my absence. And as I've said in the past, honestly, this channel is not designed to be monetized or anything like that. It's just some things I put out there, just food for thought. So I wanted to make a video today on using these footprint charts again, and I've made a few videos on them in the past, so you can go back and watch those. And this is a specific trading strategy that I've been using that works fairly well. I guess you could call it a scalping to day trading strategy. You could use it for scalping, where you might be in and out in 20, 30, 60 minutes or so, or you may want to, you could use it as a day trading strategy too, where perhaps you're in longer, but that's up to you. Now, I use this on a 10-minute chart or 10-minute cluster chart, but it's a 10-minute chart of the underlying instrument. Now, these are futures. These are not Forex pairs. And again, I don't recommend using footprint charts on Forex pairs. And the reason why, again, is because Forex is a decentralized market. So if you see these, if you put this on your Forex chart, you're seeing tick volume, not real volume, and you're only seeing it for your broker. You are not seeing the whole underlying market. Whereas these are futures accounts and instruments, so these are exchange traded, so it's showing you the volume and the action across the entire market through the exchange, regardless of what broker or where somebody's trading at. So this allows you to see all the volume, not just from your broker. So this is real volume, okay? So I just wanted to know, I do use other strategies on my Forex account, but I do not use, I did try the cluster charts, and I just didn't find them because of the limitations to be valuable. So I don't use this at all on Forex. Okay, I'll just say that right up front. But we're not going to be talking about Forex today. So the instrument, this happens to be the MNQ, which is the E-mini NASDAQ futures. MNQ, this is the September 2022 contract, and you can see we're on a 10-minute chart. And basically, again, this is a footprint chart or cluster chart, whatever you want to call it. I don't have this zoomed in, so you don't see the actual volume numbers in these clusters, but because I have it set as a histogram, I don't really need to. I mean, I can just tell visually by the clusters where the volume is. So I find this to be perfectly fine in terms of zooming in. So what you see over here is just this little window inset is the underlying candlestick chart, and it just shows you where on the cluster chart you're focused on right now. So you can see this white triangle. So as I move, if you watch this white box, as I move the cluster chart, you'll see this box move. Okay, and it's just telling you, so it just kind of gives you a reference point, because obviously with this cluster chart, you can get lost pretty easy, like, okay, where am I actually on the actual underlying contract? Okay, and so we want to make sure that we kind of keep a reference point here. All right, so that's what this is showing us. All right, and so this channel you see here is a 10 EMA channel. So it's a 10-period exponential moving average, one set to the high, one set to the low. So this is just a little EMA channel. That's all this is. Instead of being set to the close, I put two on, one set to the high, one set to the low, and it creates this channel, which is a nice reference point for me about where the price is sitting. Is it sitting inside the channel, outside the channel? You don't need it, but I do like having it on here as a reference. Okay? And then down at the bottom, these are volume delta. This is a volume delta indicator. And this is basically showing you at any one cluster chart. So say for this one, for instance, since it's blue, that means there were 46 46,000 more buy contracts here than sells. So this is delta. So it's the difference between the buys and the sells. It's not the actual number. I could put an indicator up here that will show me two little side-by-side bars, one blue one, one red one, which will show me which one is more. But I just want to see what the difference is. In this case, I want to see that there were more buyers than sellers, and by how much. So this is just volume delta. So if it's red, that means there were more sellers in that particular candle. If it's blue, it means there were more buyers. Okay? So that's what we're looking at here. And then these actual clusters or footprints are just set to the bid and ask on left and right. So you can see the actual candlestick right in the middle, and this one's a green candlestick, typical. And then the red side here are all the sells or the bids, and the green is the buys or the ask side. And this just kind of shows you the distribution amongst this on this particular candlestick. It shows you, in this case, most of the trading action was up towards the top of the candle, okay, which can be important, although it's not always a guarantee, as you'll see in this example coming up here. So this is the opening candle. Okay, so let me just make sure I cover it. Okay, yeah. So this is not deltas. This is actual volume. So I used this for delta. So this is just showing the actual volume. Okay. So it's important to see what's nice about this. It shows you where the price was, where most of the trading happened. And generally speaking, if you have an up candle and most of the trading action is taking place at the top, that's usually a pretty good sign. If you have a down candle and most of the trading action is happening towards the bottom when the candle closes, that's a pretty good sign that that downtrend will continue. But if you have a down candle, this one is green, but if say this was a red candle and you still saw most of the trading up at the top, that would not be very conducive for me to want to take a short, because it just shows there was no volume. Even if the candle closed down, there was no volume happening in the bottom, say, third of the candle. And so that's the nice thing about this. It kind of shows you not only did the candle close higher or lower, but where was the majority of the trading during that period. And again, this happens to be a 10-minute chart. So I'll show you a couple of these, how this works. So this candle right here is the opening of the New York session for this particular instrument, which again is the E-mini NASDAQ. You can see it's 1330. That happens to be the opening. That's 9:30 a.m. New York time on my broker. It just happens to be 1330 on their platform. I don't know why they choose that, but whatever. So this is the opening candle. So I will completely ignore the opening candle. I don't care what it says. I will ignore the opening candle. Okay? And you can see here we had, but if you do want to look at it, we had green. We had a very strong opening, but yet we had a lot of negative. We had a net selling of 79,000 contracts. So even though this closed up very high, there was a lot of selling. But at the same time, the selling occurred all the way here at the top, and there was very little volume at the bottom here. Okay, but either way, I'm kind of ignoring this anyways. So I'm going to wait for the next one to close. So this is 20 minutes into the session, because this one closes at 1340. This is the 1340 candle, and closes 10 minutes later at 1350. And you can see we have now closed above and outside the range, outside of the moving average channel. At this point, I probably would take a long position here, because not only did we have positive delta here, but we closed towards you can see most of the price action was higher up. The one thing that does concern me about this is that, yes, there was positive volume here, but you can see it was quite a bit lower than the selling pressure on the opening candle. So that does give me a little bit pause for concern, and that turned out to be worthwhile. So I would have gone long right here at the close of this, which is about 13,372. And then you can see the next candle closed. It did close higher, but you can see the volume delta is red, so that's a warning sign to me. Same thing on the next one. We closed just slightly higher, but again, the volume is negative. Okay, and there's not a lot of selling here, so at this point, at the close of this one, I still wouldn't be too concerned, because even though there's more negative selling, it's lower than the blue, and there's really nothing down here at the bottom. Most of the selling is in the middle to upper third of this candle. But then we see this one, and again, we don't really make any progress. We almost have a doji here, not quite, but it's a big wick candle. And you can see that the selling pressure is distributed pretty evenly from about the middle of the candle on down. Okay, and it's negative delta. So at this point, honestly, I probably would have exited this trade just based on that, because you can see after 2 candles, we're not making any progress, and we're painting more and more red volume all along the candlestick. So this still would have been a slightly profitable trade, 13,372 to. So this would have been about 24 points. So on a single E-mini contract, this would have been about $50. That's about all this would have been. It's very small, okay? Because this is $2 a point here on this contract, okay? So not much, okay? So then we would have exited and say, okay, let's see what's going on. Next candle paints, it's a red candle, but it's still above the moving average channel. I wouldn't have done anything here. But you can see what's going on here. We have negative volume, delta, and we have the selling occurring in the bottom of the candlestick. See how much more volume is going on? There's not a lot of buying up here, but the selling is all at the bottom. So we had a bearish candlestick. And it's an engulfing candlestick. Well, it's not quite, because it didn't engulf the top of this, but the body certainly engulfed this doji over here. But so then, okay, so okay, great. Let's keep an eye on it. Then the next 2 candles are basically indecision candles. They close back inside the moving average channel. So if you didn't be aggressive and take a sell right here, I probably would just do nothing right here. Okay. Because this one closed back outside of the range right here, but barely. And you can see the selling volume, the buying volume is really highest right in the middle. It's fairly high at the top. Well, you had 1 or 2 bars sticking out here at these prices. But for the most part, the bulk of the volume happened right in the middle. So that's kind of indecision, which you can tell by looking at the candle. So again, probably not much going on. And then boom, the next candle closes down. It's a very large bearish candle. It's followed by bearish volume higher than this buy volume, and it closes down below. So if I hadn't gotten in over here, then certainly right here I would have taken a short position. Now this one was more aggressive, and you could have taken this even though it was above the channel, and you could have taken this just simply based on the fact that this closed down, and again, most of the volume, especially the selling volume, happened at the bottom of the candle and not at the top or in the middle. So this suggests that at least in the short term will be going down. And indeed, if you had gone short here, 13,371 down to here, you'd already be almost 50 points into profit at the close of this candle. Okay? So then the next candle comes, we have a little pullback. Now we've pulled back inside the channel. Not really much here. Okay, we're inside the channel. Volume's pretty low, which tells you these probably are just corrective moves. So certainly if I was in here, I would have held these. Okay, and then boom, the next candle comes back again, closes back outside. Below the channel, the volume increases again down at the bottom. And we proceed to drop and drop and drop. Okay, we come down here. Okay, now you may have exited right here in real time because, again, look at the volume. Even though it's pretty high compared to this, right, 34,000 compared to 22,000, look at all the selling volume. All the volume in general is up at the top here. So you may have exited on this candle right here. The next one does come back and continues to go down. And then you can see we just kind of moved sideways. So this would not have been a bad place to exit. Because you can see, even though this one did go down a little bit more, the next two come back, and this one would have actually eaten back into your profit a little bit from this close. And then this one comes down again and basically lines up with this one again. And then it does go again. And then we bottom out, and then we start to head higher. So it's just kind of a warning sign, and again, guys, you could have held this and just say, okay, well, I'm going to maybe put a trailing stop on this because the volume is still building. The negative volume is still building. But I'd be concerned about this right here, about the selling taking place here all the way at the top and not a lot of interest to sell down here at the bottom. Okay, all the selling's happening up here, but there's also a lot of buying taking place up here too. So I would be a little bit concerned about holding it past here. Okay, and then, we bottomed out. So whether you held these or not, now you could have actually maybe re-entered right here. Okay, but again, you don't have a lot of volume down here. Again, look, most of the selling volume in general is at the top of this candle, which you wouldn't have known just looking at the candlestick. Okay, you would have seen a lower close and say, oh, this thing's going down. Now the very next candle, it does go down a little bit. Okay, this is 214 down to 170. So this is about 44 points from here to here. So yeah, there's a little bit here, but then you see we bottom out again. All right, and we see green candles and kind of indecision with volume being distributed throughout and actually being distributed to the upside here. Okay, and then we move back inside the channel again, and we just keep going. Now we do eventually break lower again here. Okay, with volume, we close right here. Okay. With below, all right, we did have selling volume. It is higher down at the bottom than it is at the top, but it's still kind of in the middle. You can see all these big wicks really would concern me, that there's a lot of buyers jumping in here, but it does kind of drift lower, okay, and then we finally start to break up, but then the session ends. This is the end of the day, so we're not going to worry about anything past that. So let's jump forward to the next day. And we want to go back to 1330. Okay. All right, so here's the next day. Again, here's the open, big negative volume. We close down. We're going to ignore this candle. The very next one comes back. Okay. We have, again, negative volume, but a green candle. We don't have a lot of selling pressure here. Okay, so I'm a little concerned about taking a sell right here because all the selling is going on up towards the top of the candle, okay, along with the buyers, and it is a green candle. So it's basically not too much different from the opening one as far as where it closed. And the next one comes back, boom, all right. You can see a lot of a big range, negative red candle. However, note the volume in here. Now, there's definitely is more in the bottom half of this candle. There's more volume, but it's still pretty thin. Look how thin it is in here. You would think that this area would be, a lot more sell volume. So you could have gone short right here, but it would have been a short-lived trade. You would have had, call it 13,000 down to, you would have had about, 25 pips. 25 points to this low, but then you would have given it right back on the next candle. So, and you can see the volume here is actually a little bit lower. So this is a concerning looking candle. All right, and then what happens is we kind of drift back up inside the channel. All right, so certainly there's nothing going on here. Right, we have very evenly distributed volume. All right, we're inside the channel, inside the channel, inside the channel. We got another close down below with a lot of selling here. So if you had gone short right here, this one you probably would have been stopped out. Okay, only to see this continue down. So let's go back and look at this. We have this close right here. We have volume increase 28,000 versus 26,000 red. We have a lot of selling going on right here. You can see the shape of this candle. Not much trading up here. All the volume is down at the bottom. So even though you have this wick, okay, but then we have to come back with this next candle here. And it's a huge green candle, but you notice it still closes inside the range. And again, the volume is distributed very choppy along this candle. Okay. So let's just talk about stop loss placement. Now, you probably would have thought about just putting your stop right here above the high of this candle. You went short here, you put your stop here, fine. Then you would have been stopped out on this candle, okay? Because it went quite a bit further. So an alternative to that is to place it, if you're going short, place it above the high of the last candle that closed or had action outside of the moving average channel, which would have been up here. Now, if you'd put it up here, okay, you would not have been stopped out on this candle. However, you probably would have been stopped out on this one. So this is just one of those things where you just, unfortunately, depending where you want to put your stop, you're probably going to suffer, a stop loss. So you might be better off just putting it above the high of that candle that you entered at. So in case right here, you would have been stopped out right here, fine. And then the very next candle, it went up again, but you can see it closed back inside the channel. Okay, did not close up above here, and again, all the volume is really in the bottom half. So this is suggestive of another downtrend. So you could have, if you wanted to be aggressive, you could have gone short right here, just because it rejected this high right here, closed back inside the channel, negative volume, following a downtrend earlier. Okay, put your stop right here, and then let this thing go, and you can see the price just collapsed. Okay, all the way down to here. So from here, 13,037 to 12,966. That's what did I say this was? That's 37 plus 34. So this is 70. This is at least 70 points right here. This is about 70 points from here to here, which on one contract is, is about $150 from here to here. Okay, on one E-mini contract. Okay, so you can just kind of see what we're doing here, guys. So there's a combination of things going on here. You want to, so again, guys, just to review, let the first candle go. The opening candle, you're just going to ignore it, regardless of what it's doing. Just ignore it. When the next candle closes, either that one or the one after that, depending how aggressive you want to be, then you're going to kind of make a decision about which direction. Okay? In this case, on this day, here's the opening one. Okay, large negative selling pressure. Okay, but we're not going to go short here. The next one comes back. It's a green candle. Okay, it's a green candle. We still have negative volume, but a lot of it is happening. A lot of this volume is trading at the top of this candle. So even though so not only do we have negative volume, but we have a green candle, and we have a lot of the volume happening towards the top. If this had been shaped whereas this was down here, I would have taken a short right here at the close of this candle. Of course, this candle probably would have been red in that case. That would have been a definite entry. So this is a little bit of an indecision one. The next one comes back, and again, we have red, but I'd be a little concerned just the way this thing is shaped, because the volume is kind of sporadic. As we have a little cluster here, and then it flattens out to nothing, and we have another little cluster. And the reason why is because it's such a big candle. The move happens so fast that the volume is just distributed along this candle. All right, so you could have gone short right here. You would have put in a small profit right here, but chances are, now if you had put your stop up here, you would have kind of gone into some drawdown here, and you probably would have gotten stopped out before eventually this downtrend continued. Okay, so this one's a little bit tougher, but again, guys, so why don't we go and do one more day? Let's go to August 10th. Go to the opening. Sorry, got to scroll like this, guys, and find the opening. Okay, here's your opening candle. Okay, ignore that one. Very next one comes back. Green candle. Okay, green candle. Volume pretty heavy along the top side of this from about the middle up. Okay, and then the next one comes back. All right, and this one would be more of a concern to me because, again, we've got a red candle with a lot of selling down in the bottom half. And then the next one's a doji, pretty much volume's pretty evenly distributed, but a little bit weighted to the top, which is still, good. But you can see the volume is falling now. 37 goes from 43 to 37. Then we have this big red candle comes back here, probably stopped us out of this trade right here. All right. And so that's fine. You would have taken a stop out here. But you can see again, red candle, negative volume, but look at the bottom of this candle. There's nothing going on in this bottom there. There's no selling. All the selling took place in the middle. Okay? So this tells you that this is probably not going to go down again. And sure enough, the very next candle comes back. The price starts to open lower. It makes this new low, and then bam, it shoots back up, closes higher, and with more of the volume towards the top. This actually could have been an entry right here, and then boom, the market shoots up, and you would have gotten back your stop out and then some. So if you had rode this to the all the way up here, again, higher volume, a little bit of an indecision candle here, but volume still trading a little bit higher to the top. Again, higher volume up here at the top, so you could have held this, and then you probably could have exited maybe at the top of this candle. So let's say you got in here, 13,282, 365. That's like 80 points from here to here. That's about $160 on one E-mini contract. And that took you 10, 20, 30, 40 minutes. Okay, you would have been in this trade for 40 minutes. Now you can use a trailing stop as well once you get into profit. Maybe use your ATR. I don't know if this thing offers ATR. It does. Yeah, we'll just leave it at 10. So you can add an ATR on here. Okay, so the ATR is 48. So you could put a 48 pip, a 48 point stop loss on here. That's kind of big. I don't know if I would have done 48. Let's change this to 14. See what that does. It makes it a little shorter, 46. So this is telling you a 46 point ATR. You could use that for your stop loss. So if you had a trailing stop going, you could trail it 46 points back, which is basically almost from like the top of this candle to below. So, when this candle went up, your trailing stop would have come up to about here, and you would have been taken out right here when this poked down. So, I don't know if you want to use an ATR or not. I suppose if you're going to step away from your charts, it might be good to at least lock in some profit, but you would have given, a decent amount back. But you can use the ATR, and you can play around with the setting of it. Let's make it, let's make it 21. That may lengthen it. Yeah, that makes it even longer. Let's shorten it. Let's make it 5. We tried it at 10. At 5, it drops it to 30. So you could maybe use what is that, 30 or 36? Can't tell. That line's cutting through it. Let's say it's 36. So again, that's 36. Is basically the length of this candle. So, whatever. You can use the ATR as a trailing stop, or you can just manage it manually. But if you're going to be away from your chart, suppose you get in, you got to step away. You got to be careful, guys, because a lot of these are probably not going to be long-term trades. If you're going to be away from your chart more than 20 to 30 minutes, once the thing gets into profit, I would definitely put in some kind of trailing stop based on probably the ATR. Okay? It's just a thought. All right, guys, so that's really about it. So again, guys, opening candle, 9:30 a.m. Ignore it. Do not do anything with it. Wait for the next one, okay? See if you get some definitive action in terms of volume painting in a particular direction, at the high or low of this candle. In this case, this is a long setup right here. We still have negative volume, okay, but it's less than the opening candle. It was 38,000. This came back at 32,000. So even though it made a new low, it's diverging in volume. But you can see at the close of this candle, most of your volume is at the top. Okay, it's at the top of this candle. Okay, and then it just keeps coming back for no. And now it turns blue. We're going to hold this, hold this, hold this. All right, even up to here, we're spiking up in volume again. All right. And then here we have pretty evenly distributed volume. So quite honestly, I probably still would have held this one. Then the next candle opens up red. It closes down right here, and I would have exited. If I didn't get out here, I for sure would have exited right here, because you can see we have painted negative volume, and most of it is at the bottom of this range, which suggests it is going to go lower. And it did eventually, but it took it a while. It actually did drift back higher again. Kind of moved sideways. It really didn't make any progress here. It really wouldn't have been worth holding on to this, even though these next two candles were green. This still would have been a good decision to exit right here, because eventually we did close back lower. All right. So how long do you hold these trades? Again, guys, it could be as little as 20 minutes. I've seen a lot of these where I'm out in two candles, so 20 minutes, I'll take a quick, on this particular instrument, I'll take a quick, 50 points, and then I'm out. Or sometimes it looks like it's going to keep going, and the volume is painting on the candles the right way, and we keep the delta pointing in the right direction. Then I'll hold them, and maybe I'll stick a trailing stop in there. And just hold on to it and just leave them alone. And then if I get taken out, I get taken out on the trailing stop, and that's fine. At least I know I've locked in some profit, and I'm okay with that. And then I'll sit and just wait and see what happens next. Okay. And you can do this on any of these. This happens to be the MNQ. I trade the MES, which is the E-mini S&P, the MNQ, which is the E-mini Nasdaq. Again, $2 a point. The MES is $5 a point, and the other one is the MYM, which is the E-mini Dow, which is 50 cents. And because this is only 50 cents, if I take whatever size contract I want to trade on the ES or the NQ, I'll double it on the YM, because this is only 50 cents a point. So if I take a one contract trade here, I'm going to take two on the MY, just again because it's only 50 cents. If you take only a one contract trade here and it only moves a little bit, by the time you pay your commissions and stuff, it's almost not even worth it. So I take at least two contracts on the MYM, okay? But the NQ and the ES, if you just take one, that's fine. But you certainly could take more. Just whatever, for me, whatever I would take on these two, I would double it on the MYM, okay? And those are the only three I trade. This is the DAX right here. I only trade the DAX. I have a Friday afternoon setup that I do. It's the only I don't trade the DAX during regular New York hours. Okay, so that's it. And so this just using your cluster charts. The only other thing that's not showing on here, guys, is the depth of market indicator is going to paint inside this pane right here. But because the market's closed, it's not showing, obviously. But there's a histogram that paints vertically as the market is open, and it's a depth of market. It looks like a it looks kind of like a volume profile that's continuously changing in here. You'll have this yellow line, which is kind of like the center price, and it's just showing you the depth of market. It'll show you the buys and sell volume around the current price. And as that histogram, if it grows, more on the buy side, then there's more buying pressure. And it's good to see that while a candle is painting. To see kind of where it's trending. Is it trending more up or down? And obviously these bars will also adjust while a candle is painting. So if this candle was active right now, you'd be seeing this bar change as the candle develops, and then once it closes, it'll lock in, just like the footprint chart will lock in. So I do have that depth of market, although quite frankly, I don't use it that much because I want to see what the close is. What it's doing while the candle is painting can change really second to second. So I don't necessarily use the depth of market, but it is on here normally when the market's open, it will be showing to the right of this white line right here, and it kind of hovers around the range of the current candle. So it doesn't cover the whole price zone like depth of market would show you all the price. It's going to hover around a particular piece of the market. Okay, so I'm going to leave it there, guys. So again, you have to have these cluster charts. So this is an optional indicator that I bought on MT5 Marketplace, because this is a MetaTrader 5 account. So on MT5 Market, it's called U Clusters. So if you go to right here, it's this one right here. It's called U Clusters, and I have it customized. I just, change the colors and stuff. You can obviously customize it. It's $225 to buy it outright, or you can rent it if you want to just try it out. I think it's like $30 a month. And there's all kinds of screenshots, and there's a demo video, I believe, that tells you, yeah, right here, it tells you how to, that shows you kind of how you can set things. And this was just updated in July, so this Yuri Kulikov guy that developed this seems to be pretty good. This is the 7th version of it, so he does update it, which is really nice that he's still, making improvements to the indicator. But this is U Clusters, which I found on MetaTrader 5 is the simplest, but the simplest one to use and configure. There are other ones available. And like I said, the nice thing about this is it has the underlying, this is a little inset of the underlying candlestick chart, so you can kind of see where you're at, okay, in the, so you can see kind of support and resistance areas and pullback areas on the underlying chart in this little inset window, and you can move this around, put it wherever you want, or you can just click here and get rid of it, okay, but I like to have it up here just so I can see where I'm at. If for whatever reason you wanted to just minimize it, and minimize the candles, the cluster chart, and just see the underlying chart, then you just click this button right here, and there you go. There's your candlestick chart underneath for the same time frame that you were looking at on the clusters, which is really nice. So that if you want to just kind of reorient yourself, because the clusters can kind of take your orientation away a little bit because you're so zoomed in on these things, that you can just click out here and say, oh, okay, maybe when I had gotten up to this area, this is, a peak high up here, if I was in a long position, maybe I don't want to carry it past this area, okay? So it just kind of gives you an idea of where you're at in terms of the, the underlying chart, okay? So, so that's it, okay? That's about it. All right, so I'm going to leave it there, guys, and I hope you enjoyed the video. Any comments, questions, concerns, please leave them down below. If you have any questions about the indicator, you can go to MT5 Marketplace, look up U Clusters, YU Clusters. I have nothing to do with it. I don't receive any commission. I don't have an affiliate link. That's just the one that I kind of settled on. I tried 2 or 3 different ones, and that's the easiest and, in my opinion, the best one. You can configure it however you like. But if you have any questions on how I have it set up or the process, just drop it in the comments. Appreciate you watching, and I'll try to make another video perhaps coming up this week with some trade examples that I took on the coming week. All right, guys, have a great weekend. Talk to you soon.